Welcome as we continue our discussion on accounting for revenue under IPSAS, specifically dealing with non-exchange transactions, which are covered under IPSAS 23. Let's talk about measurement. Revenue is measured at the amount of the increase in the net assets recognized by the entity. An asset acquired through a non-exchange transaction is measured at its fair value at the date of acquisition. Now, just to explain, if an entity will receive computers as a donation, that becomes a non-exchange revenue. And how is that revenue measured? The fair value of the computers at the date in which we receive the donation. That becomes the increase in my net assets, and that's what I'm going to recognize as my revenue. Okay, I want to talk about when is revenue recognized with regards tax revenue. The standard deals with tax revenue and say revenue is recognized when a taxable event occurs and the asset recognition criteria has been met. Now, I want you to think about, before I get into detail, think about what are the taxable events for your income tax, what is the taxable event for your value-added tax, customs duty, estate duty, as well as property tax. Let's discuss them. For your income tax, the earning of assessable income during the taxation period by the taxpayer. For example, when you are employed, you are required to pay as you earn. So the taxable event is you earning an income, and regardless of whether you are paid or not. Then when it is VAT, the undertaking of taxable activity during the taxation period by the taxpayer. Estate duty, the death of a person owning taxable assets. The moment you die, estate duty accrues to the government. Customs duty, the movement of dutiable goods and services across the custom boundary. So the moment you bring in goods into the country, in custom duty, the taxable event for the customs duty is at that particular point. Right? Grants are recognized at the receipt of a grant or when there's an enforceable claim. Fines arises when there is a conviction for a breach of law or regulations. Fines are therefore recognized in the period in which the fine is imposed. Donations, receipt of a gift of donation or transfer of legal title. For goods in kind, receipt of the goods or a binding agreement to receive them. Debt forgiveness, when a binding debt forgiveness agreement is done. Right, still moving on. In the public sector, it is very common to receive services in kind. So services in kind are voluntary services provided to an entity by an individual or individuals. Such services may include free technical assistance from other governments or international organizations, voluntary work in schools, hospital, community services performed by convicted offenders. Entities, this is what the standard says, entities may but are not required to recognize services in kind as revenue and expenditure when the amount can be measured and is material, and its inclusion enhances the presentation of financial statements. So whether it is recognized or it's not recognized, disclosure of the nature of the significant services in kind is also encouraged.